Tuesday, the 14th of May. Thanks for joining me. We've got two very important inflation numbers out of the US this week. And they're so important because the whole market is solely fixated on what the Federal Reserve is going to do with interest rate. Will they cut? Will they pause? Will they even hike? The economy appears to be slowing, but recently inflation has been ticking higher. It's the worst of both worlds, where the Federal Reserve cannot cut rates in order to support the economy. So these numbers really are important this week. Producer price index is out today. The consensus is at plus 0.3, which means producer prices have risen. The core PPI plus 0.2. Now, if we get those numbers in line, the month-on-month plus 0.3, if we get the core month-on-month plus 0.2, there should be very little reaction in the market. If the numbers come out higher than those two, then that would indicate that there are upward inflationary pressures. This will further tie the hands of the Federal Reserve insofar as cutting rates goes, and it may even increase speculation about the next move in interest rates being up. That is likely to push the dollar higher. It could push the price of gold lower, and it could also knock the stock markets. We could see a sell-off in the stock markets if they are worried about inflation being sticky, as it's called, or even pushing higher as it has been doing so in the past few months. Same idea for CPI, which is probably more important than the PPI number. Tomorrow, we're looking for plus 0.3 month on month, year on year, 3.6%. So a higher than expected number could push the dollar up in expectation of rates being held at this level for longer. In other words, not being cut for a period of time. Or even if we get a significant jump in inflation, it could push the dollar up in expectation of a rate hike. That would be extremely bad news for the stock market as well. So the markets really want to see an inline number or a number that is lower than expected. That would weaken the dollar. It would probably encourage investors to jump into stocks, pushing the stock market higher. They would feel more confident about the outlook for the economy. Gold prices could also see a relief rally if we get weaker than expected numbers. Looking at the 4-hour chart for stock markets, this is the Dow Jones. We've been in a really nice bull trend lately. We had a small correction, but we are recovering nicely from that. We're getting a little bit overbought on the daily chart. So I think we will struggle to move higher without a trigger from the inflation numbers, but there is definitely no sell signal as far as I'm concerned. I can't see any reason to short the stock markets at this stage, unless, of course, we get a significantly higher inflation number this week. Here is my 4-hour chart for the S&P. You can see good recovery. I've littered it with the usual trend lines, moving averages and Fibonacci levels, but you can see that the price is trading above the moving averages that I have on my 4-hour chart. We broke above this consolidation pattern. I could possibly call it a flag, but we broke to the upside, and we are holding above some important Fibonacci levels as well. So right now, I see no particular reason for me to sell the stock markets. Does look like the bulls remain in full control. 4-hour chart for gold looks quite similar, certainly in a nice bullish trend, at least since October on my 4-hour chart. We had a bit of a correction to the downside. We haven't recovered quite as strongly as the stock markets, but we have recovered. We dipped yesterday. We should have some support around 23.25, 23.20. As you can see from my trend lines, Fibonacci levels, and my moving averages, we bounced just above there yesterday. If you've got any comments or questions, please put them in the comments box and I will reply to them as quickly as possible. Good luck. If you are trading the markets over the inflation numbers, be very careful. We could see some unexpected moves when they are released.